Welcome to the Loner Ranger Radio Show with Bruce Woodburn, CrossCountry Mortgage. Yes, I am the Loner Ranger. Thanks for listening to me today. Again, my name's Bruce Woodburn, and we're going to have a good time on the show today. So stay tuned, pay attention. We're going to cover a lot of ground here, a lot of things going on in the real estate and economic markets right now. There's a few shakeups. We saw the stock market go up and down a little bit. But the most important to me is the bond market. The bond market dictates what interest rates are doing on home loans. The Fed rate has nothing to do with home loans. Don't ever be confused by that. I don't care what the Fed does. They could lower rates, raise rates. Doesn't have any real impact directly on mortgages. What does? The bond market, the 10-year Treasury bond and the 30-year Treasury bond. That's what impacts interest rates for mortgages. So if you want interest rates to drop on mortgages, the Fed dropping the Fed rate will not have an impact on mortgages. And yet people call me every day and they go, hey, I heard the Fed dropped the Fed rate. Should rates go down a half a point? No, they actually went up. So let me ask you a question. Why would interest rates go up if the Fed drops the Fed rate? Well, if you listen to my show long enough, you're going to be smarter than your friends. And I'm going to tell you why. Because they don't know why. But I'm going to tell you why. First of all, you have to understand the dynamic between equities and bonds. So I'll explain it to you. Institutional money, meaning the big money, the traders that are moving billions of dollars around in the market on a day-to-day basis, insurance companies, hedge funds, venture capitalists, things that are working with, tens of millions or billions of dollars. When the stock market looks like it's going to do favorable, they move money from bonds to stocks. They do that because they're going to make more money in the stock market. So they move their money into the stock market. When the stock market is unstable or it looks like things could go sideways, they pull out of the equities and they put their money in the bond market. The bond market will not pay them a great yield, but they won't lose money. So it's a great parking place. So now we'll get back to that relationship and why interest rates are not directly affected or could be affected negatively when the Fed lowers the Fed rate. So why would the Fed lower a Fed rate? In other words, what's the purpose behind that? It's to stimulate the economy. So why would the Fed raise the Fed rate? To slow the economy down. We saw that back in 2022. They did massive rate hikes and literally put the economy into a standstill. Thank you, Biden. So in September, the Fed dropped the Fed rate by a half a point. November, quarter point. December, quarter point. So full point altogether. Rates are higher today than they were before the Fed dropped the Fed rate. Why is that? Because when the Fed dropped the Fed rate, it stimulated the economy. And when the economy was stimulated, it stimulated the stock market. And where do you think institutional money is going? Into the stock market. So it pulled all the money and the equities and the energy out of the bond market, and that deteriorated mortgage rates. Now you know the rest of the story. So when your friends ask, when the Fed stimulates the economy, it's going to make mortgage rates worse. Now, could they get better over time? Well, that's what we're seeing today, folks. So this week was probably the best week that we've seen in the bond market in a long time. Now, are interest rates 5%? No. Are they 6%? No. But they got better. So they're still running from the mid sixes to the mid sevens, depending on your credit score, how much you're putting down, whether it's owner occupied or investment property. But that's where interest rates are lying right now. So they're improving, and they're improving nicely. So we locked a lot of loans in. I saw a lot of new activity. A lot of buyers are jumping back into the market right now. They know they're not going to see that 5.5% rate anytime soon. But for those of you that are buying right now, you can rest assured that you're going to want to refinance. There will be a time that you're going to want to refinance. Now, I don't know when that is. Might be in a month, might be in 6 months, might be in a year, might be in 2 years. I don't know, but you will refinance. And that's not a bad thing because you're only going to refinance in order to drop your interest rate and lower your payment. So that's just something that's going to happen for anybody that's buying a home right now. So just expect it. And that's not a bad thing because you're going to get into the home now at today's price. Now, keep in mind, I know that Trump is threatening all these tariffs, and there's some tariffs might even happen. And that could raise the cost of products, which could raise the cost that they cost a builder to build a home or a homeowner to renovate their home. So you can expect some price increases in houses. They're not going to drop, folks. They're not dropping. But right now, as a buyer, you have an advantage. As a seller, it's kind of neutral. It's not an advantage. It's not a disadvantage. But for a buyer, it's an advantage in most areas of town. If you would like to talk to me, my name is Bruce Woodburn. I'm the loan arranger. This is an informational news network. I am giving you information on the market. This is not a sales pitch radio show. Granted, am I here to help you with your mortgage? Yes. Am I here to guide you in the right direction in real estate? Of course I am. But this show is designed to make you smarter and more informed so that you can make an informed decision when you're choosing your real estate agent, when you're choosing your mortgage lender, and how to properly negotiate a transaction. So you can reach me in Tampa Bay right now, all the way down to Cape Coral, all the way to Lakeland, 813-213-4009. That phone number again, 813-213-4009. If you're Orlando, all the way up to Jacksonville, you can call me at 407-706-3313. That's 407-706-3313. Or you can go to my website at webringyouhome.com. That's We Bring You Home. We're bringing you home, baby. So webringyouhome.com. Go to my application and fill out an application there. We will start with a soft credit pull. You don't have to worry about your credit being affected. And we will get you pre-approved for your financing. Now, if you want to buy a home, here's how I can help you. I'm a direct lender. I'm in all 50 states. I'm the largest retail lender in the United States of America. CrossCountry Mortgage, number one. We have the most buying power. We have the most loan officers. We have the most back office. We have the most underwriters. We've got the most. We have the buying power. We've got every loan program you would ever possibly want and a bunch you've never even heard of. So you've got the right place. You've got the right person. I'm local. When you call me, that's not a call center. That's my number. Now, if you get a hold of my office, give them the information. So when I get on the phone with you, I can drill down the important aspects of the transaction. So, but I always call my clients, You're not going to get that from Rocket. You're not going to get that from your credit union. You'll get some goofball teller in there. Your online lenders, half of them are brokers and they're just scamming people. So don't get caught up in that. It's not complicated. Look up Google on me. Look up Zillow on me. Look up Yelp on me. You find out what my record is. I'm going to tell you something. It's 5 stars. Why? Because I care about my customers deeply. I want satisfaction. I want good surveys. And to do that, I have to be able to provide you with excellent service, excellent advice, and attractive, competitive interest rates and closing costs. If you get a quote from somebody that's so far below average interest rates or closing costs, it's a scam. And they're going to get you. Just trust me on that one. If it's too high, then they're probably scamming you for extra profits. And here's the truth. My interest rates are going to be pretty close to Rocket. They're going to be pretty close to your credit union. They're going to be pretty close to your bank. Why? Because we're all buying mortgage-backed securities to lend to you. So they're the same. They're the same. That's why when you see one lender completely different than another, there's a problem there. So I'm the Lone Ranger, Bruce Woodburn, CrossCountry Mortgage. I've been in the mortgage business for 35 plus years. I've closed tens of thousands of loan transactions. I am an advisor to my clients. I'm advisor to them on their real estate transaction and the mortgage transaction. Now, I don't sell real estate. I'm not a real estate agent. Don't call me. But I do have a real estate referral program. Why? Because I found that most of you are horrible at picking your real estate agent. Horrible. You're picking out your friend, your husband's boss's wife. Worse still, you're calling on the listing agent for a property, and you're letting the listing agent then go out and show you properties. They represent the seller, folks. That's like going into a court hearing and asking the opposing counsel for advice. Come on, give your head a shake. 813-213-4009, 813-213-4009, 407-706-3313, 407-706-3313, or WeBringYouHome.com. So interest rates have settled down. We saw great improvement on the bond market, like more than we've seen in a long time. So things are getting better. They're going in the right direction. Okay. So that's good news. If you are thinking about refinancing your home, I want you to stop right now. If you want to refinance your home to get a lower interest rate and you're north of 6% right now, don't do it. Don't get caught up in the hype. Don't do it. The times will be better. So I created a VIP watch list for my clients only. And I added 350 some odd people to it. Then I started getting calls from my radio listeners saying, I want to get on your VIP watch list. So here's what we do. You send me in your information. We determine a target rate. I put you on a watch list. I call you when it's time to refi. That's how we do it. That's how we do it. But don't refinance right now. Unless, now listen to me carefully, because I'm going to switch this up on you. If you own your home, you have a lot of equity in your home, but you overspent and you're drowning in consumer debt, you call me immediately. Whatever you do, do not be late on any payments on anything, because if you're late on one payment, you could eliminate yourself from doing any type of debt consolidation. We'll look at home equity lines. We'll look at refinancing debt consolidation. When we come back from the next break, I'm going to share with you a story. Matter of fact, two stories that have recently happened that are probably very similar to you or someone you know. So this will hit home. So when we come back, we're going to talk about who should refinance, how they should refinance, and we're going to talk about if you have assets like money in the bank, big IRAs or 401ks, but you're retired now and you don't have enough income to qualify for the house you want, I'm going to talk about how I can make that work for you. My name's Bruce Woodburn. I'm the Lone Ranger. CrossCountry Mortgage, 813-213-4009 or 407-706-3313 or WeBringYouHome.com. When we get back, we're going to talk about a class that I'm holding for first-time home buyers, and we're going to get you fixed up so you know what to do in this market and what's going on so you're not duped like your neighbor. I'll be back in 5 minutes. Don't go anywhere.